Hello everyone, welcome to today's lecture. So today we are going to continue the topic of due diligence, investigation, forensic accounting, and then if I was, if I'm planning to cover, forensic accounting by 8:30, and then I will shift to the topic of internal audit, management audit, and operational audit. Okay. So in last lecture, we had a discussion on due diligence, we had a discussion on investigation, okay, wherein we were understanding the types of investigations, uh, what are the steps involved in the investigation. Then we saw some of the legal provisions like section 210, 212, 213, and 216 of investigation. Now, to continue on the same line, okay, so with respect to the investigation, these were the company section wherein we were talking about investigation, like where in which cases central government or tribunal can order investigation. Other than this, there is one more section under Companies Act which talks about the powers of investigator or inspector basically. So in case of investigation, we call them inspector. So now there is one more section which talks about the powers of inspector and the procedures the inspector can perform for the purpose of investigation. So I'll put it down over here. Section 217 talks about procedure, power, etc. of inspector. Okay. Now, when I talk about inspector, inspector is a person who will perform investigation in case of Companies Act. So, in case of Companies Act, the person is known as an inspector. Okay. Now, what are the powers that are given to an inspector? So, if I talk about the powers that are being given to an inspector, that is that inspector we need to provide to the inspector all the documents and information that is necessary for the purpose of his investigation. Then inspector can ask from any one, like the additional information that he requires for the purpose of his investigation. So he can ask the details. Then inspector can, take into his custody the paper information that he thinks that is necessary for the purpose of investigation. So he can take into the custody. Then investigator can examine, or he can ask any person to speak on oath, so that to gather the evidence or to understand. So he can examine the persons on oath. Then investigator or inspector basically will be having all the powers of the civil code, that production of books, summoning of person, inspection of records. He can fine for disobedience if there is any person who is creating disobedience, or is any no one if a person or anyone is not coordinating, then he can fine him up to 1 year of imprisonment and 25,000 to 1 lakh rupees of fine. If any person fails to produce information that is required to be presented before him as per his orders, then he can be punishable with imprisonment of 6 months, fine of 25,000 to 1 lakh, and for an ongoing offense 2,000 for every day can be fined. Inspector can ask central government for further assistance for if he requires any further assistance in his investigation. So these were certain powers that were given to the inspector under section 217. Now, another important section is section that we saw 210, 212. 13 and 2116. Now 216 was investigation into the ownership of company. So to investigate into the ownership of the company and to perform other investigations, one more section and powers, some additional powers have been provided. That is, this is also powers of inspector to conduct investigation. Okay, section 219. Now, this powers of investigation are basically, they describe like, if an investigation is being appointed under 210, 212, or 213, then what he can do, basically, that is these powers are. Okay, so if the inspector is appointed under section 210, 2112, or 213 of Companies Act, then he can investigate other body corporates, okay. Now these other body corporates can be your subsidiary or holding companies. Then he can investigate other body corporates managed by persons, other body corporates managed by person who was MD or manager of the company, who was MD or manager of the company. He can investigate other body corporate whose BOD are nominees of company or they are accustomed to act as per instructions of BOD of company. Then any other person who is or was employee, officer, or MD. So any other person who is or was employee, officer, or MD of the company. So an investigator or inspector can inspect these all companies if he wants during his inspection. So in case of body corporates, he can inspect subsidiary, holding, other body corporate managed by the person who was MD or manager in other company, BOD nominees, where BOD are nominees or the other companies accustomed to the instruction of the BOD. So in all these places, inspector can investigate if he is appointed under section 210, 212, or 213 of the Companies Act. Clear? Any doubt? Yes. So here, if you see, it was mentioned who was. Okay. But for all the current employees, it's covered over here. So other body corporates managed by the person who was MD or manager of other company. Reason because you have a limit also in certain cases that a person cannot be an MD or manager in more than one or two companies. So there are limits also. So that's why to if a person is MD over here, full time managing director over here, then it's difficult for him to be a full time managing director somewhere else. That's why the term past is used. I hope I'm clear. Okay. So this was with respect to the investigation, okay, under Companies Act. But the investigation doesn't stop here. Like it's not the only investigation that is being done. See, when I talk about investigation, investigation can be of various types. Like we discussed in the start of the lecture, investigation depends upon the type of the thing that you want to investigate. Now, fraud investigation is also an investigation where the fraud is investigated in detail. Okay, we check for the fraud, we check for the underlying, whether the transaction has occurred or not. So that is also an investigation. Investigation can be also, for non-fraud things also, like investigation for valuation of shares. You want to understand, ascertain the valuation of the shares. Then investigation can be for the, by can be inquired by incoming partner, that okay, the incoming partner is there, he wants to conduct an investigation for certain things. Fine. So investigation can be for various things. It's not necessary that investigation can only be for the fraud or under Companies Act. Like for example, if I'm proposing to buy a sole proprietorship firm, okay, a sole proprietorship business, then what I will be doing is I will be conducting an investigation that will be not under the Companies Act, but yeah, I can carry on with the investigation. But when I talk about investigation, the purpose is to examine the records and information with an objective that the transaction was carried. So my purpose here is detailed that to establish the fact. Okay, so here in earlier case, there is no limit prescribed how many years for this particular scenario. So for this particular scenario that is managed by a person who was MD or manager, no particular limit has been prescribed. See, difference between 217 and 219 is 217 provides a procedural power. 219 describes the scoping power. That what is the scope? What can be the scope? How much, which entities can he look into? So that's the basic difference between 217 and 219. Any doubt? Any doubt till now? Who can be inspectors? So here inspectors are appointed by the central government. So they have the list empaneled with them, and they select the investors, inspectors from that particular list. So basically, inspectors are, the persons, they are decided by the central government only. If you talk about, see 2 and 10. So in investigation by order of central government. So here also the central government decide, either they're one of their officer, MCA officer, and officer of any other department that will perform investigation. Investigation into the affairs of the company, again that is by SFIO. So one of the officer is of SFIO. In other cases also, when the tribunal orders, it's ordered one of the officer of central government who performs the what you can say investigation. So these are basically covered what you can say considered by uh, central government only. Okay. Let me see if I have a report to show you guys, some investigation reports. So investigations not only happen for these kind of things. Investigations happen for some of the health and hazard, what you can say, incidents and accidents also. So I was trying to search one of the investigation report, but not able to get, because these are basically confidentials and they are not available easily in the public domain. Okay. So yeah, but I'll try, and if I in subsequent lectures, if I can get an investigation report which is available in the public domain, so I can show you guys. But generally, there are various type of investigations going on, and it cannot be only restricted to a particular fraud and financial related. Yep. Okay. Now, other than this, the next topic I want to start is the forensic accounting. Okay. Now there is an amendment. So unit 3 earlier was called as in forensic audit. Okay. But forensic audit has been now renamed, and the terminology has been changed. So unit 3 stands forensic accounting instead of forensic auditing. So you need to take care that whenever if you write the answer, you use the terminology forensic accounting, not forensic auditing. So there has been amendment in that. Forensic, no forensic audit. So we will be using the terminology forensic accounting, not auditing. That's the amendment over here. So this term accounting, earlier we used to say auditing. The reason because here is when I talk about forensic accounting, what do you mean by forensic accounting? The definition itself will clarify the particular amendment over here. So when I use the term forensic accounting, there are two things which are involved in this. One is the forensic, one is my accounting. Now, when I talk about forensic, forensic is nothing but, any item which can be used in the court of law. Okay, that literally means before the court of law. So when I talk about forensic accounting is nothing but integration of accounting, auditing, and investigation skills. For auditing, accounting, and investigation skills to study and interpret the accounting evidences. So it is use of, you can say, accounting, auditing, and investigating skills okay, which helps in gathering the evidence and underlying and understanding the underlying accounting transaction okay. So forensic accounting is the use of accounting, auditing, and investigating skills which helps in gathering the evidence and understanding the underlying accounting transaction. Now, most of the people, what they do is they try to look from this point of view that, okay, due diligence versus investigation versus forensic accounting. Okay, most people try to look from this particular angle. Okay, they compare each and every side by side, but that is wrong approach. To compare forensic accounting and investigation is the wrong approach. They are not something like, investigation versus forensic accounting. No, you need to understand why you cannot compare these both. Reason because investigation, okay, you can say it's a skill also, but it's in process. Investigating somewhere, it's a method basically to gather and understand the underlying transaction. Okay, forensic accounting is a larger term which involves an investigation also. So, for example, if I write it down like this way, okay, substantive testing versus audit doesn't make any difference, doesn't make any sense, because they both are different, but they both are related also, because audit already contains my substantive testing. Same way, forensic accounting already contains my investigation. Without investigation, how can you perform forensic accounting? You cannot. You cannot perform forensic accounting without investigation. So there is no point to compare both, first of all. Second, when you want to compare, understand investigation is a small thing, forensic accounting is a bigger thing, which includes my investigation also. Okay. So wherever, if in your chapter, the word forensic audit is given, you need to replace it with the forensic accounting. Okay. And forensic accounting, as I said, it involves the integration of accounting, auditing, and investigating skills to result, to gather the evidence and to understand and study the underlying transactions. Okay. So forensic accounting can include fraud detection, fraud investigation, computer forensic, digital forensic, that is known as of now. Okay. Preparation of the evidence for admission in the court of law. There are many avenues for the forensic accounting. It's not like that, forensic accounting is only for the fraud investigation. That is totally incorrect. Same way as I said you that, investigation is only for fraud. That is incorrect. The same way. Okay. The forensic accounting is not only for, my fraud investigation. So people at times correlate both of these things. It's not correct. So you need to understand in that way also that is actually not correct. Reason because when I talk about forensic accounting, okay, the term forensic accounting basically, it's a larger concept to have a particular, what I can say, skills and, to gather the evidence. I can gather the evidence to present in the court of law. I can, do forensics and I can gather the evidence. Let's say, for example, fraud has already been done. Fraud is there. Everyone has understand that there is a fraud, there is a siphoning of funds. Now, to prove the siphoning of funds, to prove that the funds went to this particular person, I may conduct an investigation. I may use the, forensic accounting things or skills of accounting to understand the complex transactions. So it's not only just to, identify, but it's to understand the transactions also. Now, why people see in the terms of fraud? Reason because, in most of the cases, when these investigations or forensic accountings are ordered, they are the cases of fraud. Because otherwise, very less cases are there where, other than the fraud, these are ordered. Investigation we saw, but usually people do not prefer investigations when there is no fraud. So if there is no any red flag, there is no concern, then they do not usually, go for investigation. Okay. So that is the basically thing between, forensic accounting and fraud and investigation. The difference, just to clarify, there are various sections under various laws. For example, section 447 of the Companies Act that defines what is the fraud. Then you can have a criminal procedure code where again there is a definition of a fraud. Indian Penal Code, if you see section 25, it says that fraudulent act. Then if you go for the Indian Contract Act, you have a section 17 that describes the fraud. There are judicial judgments over the fraud. There are a lot of things which are there to describe what is in fraud. So I'll not go into that particular detail. Okay, for the discussion of what is fraud. Everyone knows what is fraud. Now, once, basically you are aware that, okay, fraud is where, it's majorly used, but it's not only the place it is used. So I'll take some examples with respect to the fraud and I'll explain you what is a forensic accounting, what we do here. Okay. What is the purpose of performing the forensic accounting compared to the, other areas, like, how we perform forensic accounting, what is the thing and how we actually do it. Okay. So generally, when I talk about forensic accounting, as I told you, there are multiple, types of forensic accounting. Maybe digital, maybe, fraud detections, or maybe gathering of some evidence, investigations, and all such. I'll show you with one example. For example, in ABC Limited, Mr. X, who was finance controller, identified the following with respect to scrap and production. Okay, with respect to scrap and production. So let's say this is a chart. You have a quantity of production. Okay, like how much units were produced in what years. Like, so I can say, let's do one thing. I'll have the period below. So for simplicity, period, that is years, and units production and scrap. So I'll present two type of graphs. Okay, let's say first I'll plot the production on the graph for year wise. FY20, FY18, FY19, FY20, FY21, and FY22. Okay, so these I'll plot some of the points just to explain you the case. Okay. This is year-on-year production graph. Okay. Because after 2020, there was a COVID period, and that's why there was a decrease in the production, but that is there. Okay. Now I'll plot the scrap generated during the period of each period. Okay. Now, when the finance controller saw this graph of scrap that was generated year to year plus the production, he went and checked that whether there was excess scrap generation. So usually there is a terminology that you have a normal loss sort of thing in production. So he saw that normal loss was within limit. And there was no reporting of abnormal losses in my production, which may lead to my scrap generation. So he was pretty much curious why the scrap, and this is scrap sale basically. I'll say it's a scrap sale. Blue one is a scrap sale, and green one is a production. Okay. So he was a bit curious, like why this is being done. Like scrap is increasing, scrap sale is increasing, production is decreasing. Why? So he saw this particular graph and he was trying to understand why this is happening. He went ahead. he and let's say for example, this is particular company which is a manufacturing company which produces a lot of items. Let's say for example, heavy machineries, automobile. Okay, I'll take an automobile manufacturing. Okay, so he went and he checked year on year what is the item that is being sold most as in scrap. So what he identified is year, item quantity, rate. Okay, so he digged out some data and he saw that okay, FY 18, 19, 20, 21, 22. Okay, so item quantity, like how much scrap was sold. Let's say for example, in first year, FY 18, the scrap quantity sold, I'll say in uh, let's say in have tons. Okay, I'll keep it in tons. So let's say in 200 tons was scrap sold. In subsequent year, it was 300. Then it went on increasing. Okay, it went to 400. Then in like 490 and 540. Okay, so these many tons were sold. And out of that, like let's say for example, this was the prime item that the scrap in which it was sold. Let's say it was steel, which is most used in automobile industries. So this was the steel that was sold as in scrap, and the rate at which it was sold. So rate per ton. Okay, rate per ton. Let's say 100 rupees per ton. It was here. Here it was 140 per ton, then 130 per ton, 120 per ton, and again 100 per ton. Now market rate of fresh steel, market rate of fresh or pure steel that is procured or purchased was rupees 500 per ton, rupees 600 per ton, 750 per ton, 780 per ton, rupees 820 per ton. Now, by seeing this data, the data which is in front of you, okay, what you can say here? Here, if I want to ask, okay, what abnormal thing you are looking in this particular data? What is the abnormal thing that you are looking here? Oops. What is the abnormal thing you are looking in this particular data? This only table. I'm not talking about comparison with the production, but this only table. What abnormal thing you are looking here? Yes, scrap is increasing year by year. Good. Come on, guys, pretty easy. Like, what issue you are looking here? Like, what is the abnormal thing in this particular data? Don't compare with the production as of now. Just tell me about this particular data. Absolutely correct, Boni. Absolutely correct. Correct, Manini. Shalanda, I will not go on to the proprietary matters as of now, but data, I'll tell you. So, if you see my scrap rate, so today, if I am selling a particular item in scrap, again, that will not fetch an amount which is equivalent to, let's say, for example, steel. If I sell steel today in market as in scrap, it will not fetch as much price as fresh steel would have procured or would have fetched pure steel, basically production grade. However, it will be, let's say, 50% of the production grade steel, or 40%, or maybe let's say any specific percentage of the amount of the fresh steel which is in the market. Now, if the prices of the pure steel or steel that can be used in the production is increasing, my scrap price will also increase, because I get a percentage of a fresh or pure product. Okay. Let's say, for example, I'll take an example of iPhone. Now, many of you sell your second-hand iPhone, or iPhone for like exchange. Now, if the base price of the iPhone increases, let's say, for example, iPhone 14. Today, you have purchased iPhone 14 for rupees 1 lakh, 2 lakh, or whatever the amount is. Okay. Hypothetical example. Now, tomorrow, if that becomes 3 lakh rupees, then the moment you will go into the market to sell your second-hand iPhone, you might fetch more amount if that would have been the case when the iPhone price would have fell. Okay. So today I purchased an iPhone, let's say of rupees 1 lakh. After a year, the iPhone prices increases tremendously. Let's say 3 lakh rupees because of XYZ reason. I'm damn sure when you will go into the market, when you sell your iPhone, although it's second hand, you will get a good amount compared to like earlier cases. Reason, because now the original product is costlier. That's why the second hand, the scrap, and the byproducts will become automatically costlier. In this case, the rate is working inversely. That, first of all, should not happen. The first red flag. So this is a red flag over here. First, sorry. So this is a decreasing price is the first red flag for me. Second, if my item that is there, steel, I'm selling it in increased quantities. Okay. In increased quantities, and market price is also increasing. But now I will compare. Now, this is something a red flag. Year by year increasing steel quantity in scrap, rate is decreasing, market price is increasing. There are 3 red flags for me already here present. Now, based on 3 red flags, someone might approach, okay, now we need to do an investigation, or we need to go for forensic accounting in this case, and we need to understand what is going on, why this is the case. This is a preliminary data. I cannot say there is a fraud. There could be XYZ reasons. I don't know. I need to conduct the investigation. I need to use my forensic accounting skills to understand this particular scenario. What I'll do? How will I do? So first I will understand, I'll tell you. Okay. So the first step that I will perform, I'll understand the business. Prime and foremost, what is the business that I'm looking into here? So I'll understand, okay, the business is manufacturing of automobiles. Then I'll understand, okay, this is the business, good, great. Now, second thing I'll understand, what is the basically, if I say, like, uh, what is the basically the percentage of the scrap for production? Okay, so what is the percentage of scrap for production? I'll gather the data. First of all, understanding the business. So they told me, okay, in their manufacturing, 2% to 3% of steel use, okay, is scrap generation. I said, fine. Okay, approved limit. You have a approved limit or whatever. That's an internal limit. That's upon to you. Okay, but you are saying 2 to 3% is your normal range. So they gave me a normal range. Fine. Then I understood with respect to what is the procedure to sell scrap. They told me the warehouse identifies the scrap. Okay. Now, then once he identifies the scrap, he reach out to procurement team to arrange scrap vendors, then vendors bid in auction, and based on that, that scrap contract is awarded. I said, okay, that's appearing good. So warehouse identify the scrap, they reaches out to the procurement, then vendor bids for the auction, scrap vendors, and then on the basis of that sold. Very much good, fine. Now, I asked them why you think there is a need of forensic audit, forensic accounting techniques, and need of fraud investigations over here. So they told me this data doesn't look good. They presented this data to me. This is an hypothetical example. Don't compare with a real life example, but hypothetical example. So they presented this data to me. Okay, now this is a case. What we should do? I said, okay, fine. Let me go. First of all, after understanding the business, the subsequent step that I will be following in case of my forensic accounting or my fraud investigation is I will understand, or I will, identify, or you can say prepare a pretext, or what you can say a particular theory for the fraud. So what I'll do, I will go and I will check whether, like I'll prepare a theory. Okay, this might have happened. This might have, occurred. Chance. Okay. So I could have, went in and checked. Okay, let's prepare a pre-notion, or you can say, or a theory that this might have happened. So I'll prepare a case scenario. Okay. And that, okay, there could be chances, there could be the collusion of warehouse manager and scrap vendor. Okay, there could be a collusion of warehouse manager and scrap vendor. So I prepared a pre-notion that, okay, fine, this can be done. I'll go, and then what I'll do is subsequently I'll go and I'll try to establish this fact. Try to establish this theory with the help of you can say gathering the evidence, okay, analyzing the data, analyzing the accounting, everything. So I'll go, what I'll do is now I'll collect the evidence. And if I talk about collection of the evidence, let's say, for example, this particular process flow was followed. So I said, okay, if this process flow is followed, let me go and check what was the actual scenario that has happened in this process flow. So I went and checked. I went and checked, okay, warehouse identified the scrap. So in FY21, warehouse team identified the scrap of, let's say, like of, whatever scrap they have sold in FY21. In our case, it was, let's say, 490 tons. So they identified 490 tons. Okay. Not 490, sorry. Here it will be, let's say they identified 190 tons initially in the start of the year. That 190 tons is a scrap. But later on, as per the records, they sold scrap more than identified one. That is, they sold 490 instead of 190. Okay. Second, the vendors that went for the bidding, there were only 3 vendors for bidding. Those 3 were old vendors. Plus, they appeared to be related party. So there was a clear flag for bid collusion. Bid collusion is something, all vendors come together. Okay, let's, bid in such a way that, award, the contract is awarded to, let's say, for example, XYZ are there. They will all 2-3 together decide, okay, I will quote 150, you quote 160, you quote 170. So it will come to me, then we'll split the quantity between all of us. So that's the bid rigging, bid collusion, bid rigging, or whatever you can call. So there was a chance of bid rigging or bid collusion because 3 vendors, they were old vendors that were continually appearing in all the years, and there were no addition to the vendors. Okay, so the bid collusion chances were there, and each year, in 1 year it was awarded to X, 1 to Y, 1 to Z. So there was a chances, there was a red flag for the bid collusion. Then this particular bid collusion or bid, there was no new vendor enrolled since last 6 years for scrap sale. So these are the certain data that I gathered. Okay. These are again the red flags, possible fraud symptoms. Basically, these are the possible fraud symptoms, I could say. Okay, these are the possible fraud symptoms. Now, what I did is I went one step ahead and I gathered the evidence. For example, evidence like number one, I gathered some evidence. For example, scrap sale notes. Okay. Now there are notes that are prepared. Okay, how much quantity of scrap was sold? So first of all, who authorized this? Means who was the signature to authorize? Who verified the quantity? Okay. Who passed entry? Into system. Then who was the person that actually what you can say release the payment? Or not released, we would have got the payment in this case. So let's remove the payment one. So these are the three areas that I went and checked. Okay, who was the person who authorized the transaction? So I identified, okay, here it was a warehouse manager. Then I identified who verified the quantity. Again, it was warehouse manager. Then I identified who was the person who passed the entry into the system. And then I came to know that was also warehouse manager. Okay. So all these three activities were done by warehouse manager. One more issue I identified, that is, what is the issue here that I identified? What is the issue do you guys think that is here in this particular scrap sale notes? What issue you guys think? Good, Bonnie. What do you think is the missing over here in scrap sale? Correct, Shailendra. Correct, Bonnie. Yeah. Or in more polished term, or in more modified term, we call it as an SOD issue, segregation of duties issue. That all the work is performed by being single person. There should be a different person for all of these tasks, but there's an SOD issue that I identified in this. The person who authorizes the transaction is the warehouse manager. The person who signs and checks and verifies the quantity is a warehouse manager, and person who passes the entry into the system is also warehouse manager. Okay, fine. Second, I went and understood, okay, how scrap is identified. So what I understood over there is that warehouse manager performs routine inspection of the raw material and identifies defective and damaged raw material, scrap returned from manufacturing uh, manufacturing or production line, basically. So scrap that has been returned to from production line to the warehouse. Okay. Number 3, you can say defective products or parts arrived from post sale scenario. At times, you sell some particular product, let's say for in a car, you sold a car, but there was some part which was not working, there was a defective part, so it came into the warranty, and you are having a lot of defective and damaged products into the warranty also due to the warranty. So he was a person who identified all these 3 areas, and then he used to report, okay, this much is there. Now with scrap sale, what was the scenario is that the person, the vendor was arranged by the procurement team, auction was there, so the contract price was decided at the start of the year. Okay. And when I checked why the contract price is established at a so low level, okay, so what I identified with respect to the contract is contracts were awarded at a price equivalent to 70% of market price. So the contract price was different than the price at it was sold. So there was a red flag that contract price was different than the price at which scrap was sold. Okay, fine. I identified that there is something going wrong, because the price that was approved at the time of contract is not matching over here. Okay, then I went ahead and I understood, okay, why this is the case. Okay, why no one is catching when the price is different. So I went and checked, okay, there are no system control around price checking for scrap sale. So there is no system control. So whatever entry warehouse manager will post into the system will directly get posted. No one will check. So whether he is, posting the correct entry, wrong entry, whatever entry, it will go directly. There was no check. And the reason, because there was an amount, the scrap sale was a small amount, so they were not that much bothered. So I gathered all this evidence. And then I came to know, after having this evidence, what I did is I went and I started what you can say analyzing the data. So I started analyzing the data. So I identified, number 1, warehouse manager is passing all the entries. Second, invoices are at price lower than contract price. Third, there were no records, okay, or you can say there were no records pertaining to scrap verification by any third person, like other than the warehouse manager. There was no any record pertaining to the scrap verification by the third person. Okay. And there is one more thing. I'll leave it for the purposefully here, not to make it too much complex. So analyze this data, and I perform the analysis. I run the data analytics. Now, when I run the data analytics, I might use like what you can say, some softwares like computer aided technologies, computer aided auditing technologies. Then there are some data analytics softwares like ACL. I can use Power BI. I can use scripts in Python based scripts. Like there are then tools like IDEA. Okay, they are known as generalized audit softwares. They help us to analyze the data. I may use Excel also to perform the data analytics. So there are a lot of things I can do to analyze the data, but keep it in simple. Okay, I'll do this thing. Now, after analyzing the data, I identified, no, there is something missing. Let's call this warehouse manager. Now it's time to call this warehouse manager. I'll call this warehouse manager. And what I'll do is, once I'll call this warehouse manager, I will perform investigation. I will perform investigation, like interviews. I'll check his records. I'll check his data, everything. So what I did, first, I actually, before calling him for the investigation, before calling him for the interview, what I did is I took help from the digital forensics. What is digital forensics? So in digital forensic, I analyzed his mail communication. Okay, to whom he is sending mail, to whom he is receiving mail. What is the mail communication? Number two, if any suspicious activity that is performing, like he's sending some files, some data to someone else, suspicious activity through he's performing, I'll check analyze the data, okay, in his computer. So usually everyone has a backup, IT backups. So I'll take up the backup and I'll analyze the data through computer software. I'll check for the PC logs, system logs. Okay, I'll perform digital analysis first of all to gather the evidence. And when I analyzed his mail, I identified he is he was in communication with scrap vendor before auction also. Let's say, for example, Mr. X was awarded this time, so there was an email communication going on some related clarification, what type of scrap item it is and everything. He was in communication with the scrap vendor before auction in detail. Now generally it was the role of procurement why he was getting mails, number one. Now to understand the suspicious activities, okay, so what we did is we checked his computer, his logs, data. files deleted. So the file deleted was one of the file where estimated scrap calculation were done. Okay, like they were, just there were some scrap calculation, estimated self calculation, like uh what is as per the normal 2 to 3%. Then his plotted numbers difference, a rate that was other than some other rate than the rate that was awarded to the contract appearing was a kickback rate, and then the amount he thought that he will receive from the vendor, some calculations like that from the files that were deleted. We analyzed the data in his computer, PC logs, and everything. So we gathered some data based on digital forensic. Now, then I went back and I called that person for interview. Wherein we detailed conducted an interview, asking him various questions for hours, like, okay, why you placed in invoice of an amount less than the contract amount, why there was a mail communication going on between you and the vendor, why there was calculation we identified, what is the calculation, please explain. Okay, why no one is verifying the scrap other than you, and every sort of detailed questions, we asked from him. We asked him to submit the bank statements of his relatives, like family members. Okay, and then based on this, we identified few things, that his relative has received an amount of rupees, let's say 40 lakhs from DEF Limited. Okay, again, they here in DEF Limited, the Mr. A scrap vendor was relative of MD. So we went back, we checked the government data and everything, and this is how we identified, okay, Mr. A is a relative of MD over here in DEF Limited, and DEF Limited paid an amount of 40 lakhs to his one of his family member. Fine. Number two, the scrap which was sold. Okay, we went back and checked with the production team. Production team told that this much scrap was never generated in the production. So production team confirmed that the scrap was the scrap that was generated in production was less compared to sold. Okay, so production team confirmed that, okay, the amount of scrap was less compared to the it is sold. I said fine. So one of the area, this was the area that, okay, we identified. Now there is some evidence with us. This is the second evidence we got. Okay, then the third evidence was a big evidence, and based on analysis that we got, the third evidence was the item sold as scrap, okay, of production was never issued to production. So without issuing the item to the production line, it was sold and scrapped. So this was a third item, or third, you can say, indicator that yes, that's in fraud. So we went in the interview and we asked that person, now we are confirming that this is a fraud, you accept it. Otherwise, he'll take the police action and everything. So that person accepted and the fraud was established. So this is how the fraud analysis or fraud investigation, or you can say forensic accounting, is done. In detail with an example, I told you, like this is how you do. Step by step. So some of your questions are there, like forensic accounting starts with a pre-notion of fraud. Basically, yes, that start with the pre-notion compared to the due diligence. Then after the fraud has occurred, then the forensic accounting is adopted to bring the evidence to the court. Yes. So let's say, for example, in this case, now I have these evidence. What I can do is I can present these evidence in the court plus his testimony that, okay, he has agreed that the fraud has been conducted. So otherwise, can I, without these evidence, go into the court and say this is fraud? Answer is no. So I have gathered some evidence that, okay, the item was never sold, the item sold as a scrap was never issued on the production. The production team confirmed that this was not scrap generated from the production, means that was a good raw material. Okay. Then the item at which it was sold, the scrap at which the rate it was sold, it was not based on the contract price. Relatives of Mr. Warehouse manager were getting amounts from the relatives of the scrap vendors. So these are the good evidences, circumstantial evidences, which will help me to prove there was a fraud in the court of law. Any doubt till now? Any doubt with respect to the forensic accounting or fraud investigation? Very good question. Now, who authorizes this forensic accounting or fraud investigation? So, the forensic accounting or fraud investigation is authorized by two persons. Either it can be central government, like we saw, like it's an investigation. Let's say, okay, investigation can be authorized by central government. Now, in that investigation, if we are using forensic accounting, the skills of accounting to gather the evidence, that's a forensic accounting. So investigation can be authorized by anyone, like central government, tribunal, or by on request of some government department, or it can be authorized by the company itself. Company will say, okay, most of the companies has forensic investigation team, forensic accounting teams. So those forensic accounting teams will conduct forensic investigations and fraud investigations to understand if any issue is there. So there is a question that why this forensic auditing has been replaced with the accounting. See, when I talk about forensic accounting, it's the gather of evidence. Auditing is you do not actually audit the evidence. Okay, you do gather the evidence by the use of skills of auditing and accounting plus investigation. That's why the term, to make more clarity, has been updated. Initially, we can request the employees that please you can provide you provide the bank statement. If they do not provide, then we can involve police and we can involve legal authorities and can bring, what you can say, summoning notice or notice to provide this particular type of statements. So generally it is, first it is on the request, then it is based on the order. We can bring the order later on. The next question is qualification for being forensic accountant. See, if I ask you the qualifications, it's more onto the skills than the qualification. I'll tell you, there are certain fields which are more onto the skills and expertise or experience rather than the qualification. So if you ask me, is there any specific qualifications? There may be degree, post qualification, post becoming CA. There are, some one of the courses for there for by ICA itself. There are some third party courses also, but here more is the skill and that is required than the qualification. Very good question. What if this theory fails? Like the theory that I, pre-notion that I created. The theory is not a, static thing that I do one thing. Based on the evidence that I collect, I revise the fraud theory. It's a dynamic, process. Like, okay, I collected the evidence, I see now, no, this theory doesn't hold good. Revise it. So that you can, why this theory is created in the fraud investigations and the forensic accounting is so that, you can go in a particular direction to gather the evidence. I cannot be a haywire like, okay, I'm going there collecting evidence, I'm checking this process, I'm checking that process, I'm checking that process, collecting a bit of evidence from everywhere. No, you will never come to an end. You should have a direction, and this theory pre-notion gives you the direction to gather the evidence. And there are cases also where you try to gather the evidence based on your theory, but you don't find anything. Then you have to scrap it. Then you have to think, okay, no, now this is not working. What could have else been in the case? And after applying 3 to 4 theories, and you finally come to know, okay, I am not able to identify any such incriminating evidence that could result or could point towards a fault, means there is no fraud. I at the end conclude, okay, there is no fraud, because after applying 3 to 4 different theories, I'm not having any further theory, or I don't have don't have any incriminating evidences, so there is no fraud. See, usually when it comes to the empanelment, so there are firms who provide the forensic accounting and fraud investigation services. So basically, it's the government who appoints, and the governments who require. If governments wants to appoint a firm, they either appoint their own officers, or if they appoint a third person. So there are guidelines that they take it out from time to time, like for each and every case. So the continuous revision and planning of a particular investigation or forensic is, yeah, till end. It's till the time you do not conclude the case or the case is not concluded. So there is one question: are many fraud theories tested simultaneously? Usually, no. We focus on one at a time. Is there any specific period for the investigation? Answer is no. There is no specific period as such. So it depends upon how easily you get the data and how complex the fraud it is. At times, years of investigation is also required. Years of investigation, I'll say. For example, uh, So if you see, there are a lot of fraud case studies outside, what you can say, published by various persons, okay, or various departments, government departments, plus you can say some organizations. Now, I'll not, I'm not pointing out any particular person, but if you want, you can go, you can see, what you can say, uh, PNB fraud case, PNB scam case, if it was there in 2017. Okay. So from 11 to 17, it was going on. Then there were a lot of cases that were there, fraud cases. In one of such cases, like I'll take an example of PNB fraud case. So a lot of period was involved just to understand and to identify the quantum that the fraud has been done. So at times you cannot say, just okay, this is simple. I'll one shot in a month, I'll identify the impact. No, sometimes it's a very complex fraud. Let's say, for example, this scam, PNB scam. Here you need technical skill to understand how it is working. It's not something, there is a physical misappropriation of asset, but it is window dressing, financial reporting related fraud. Over there, you need, basically your accounting skills. So if I identify the frauds or, issues, there are two categories: misappropriation of assets. Here, the assets are misappropriated. Second is a financial reporting related. So I do not present, I do not report the correct financials. I do not report the appropriate transactions. So in second case, you require the skill of accounting much more. Okay, in much more terms, so that you can understand how the accounting is being done for some complex transactions. So I present the complex transaction in such a way that they are not in actual. Okay. So they are presented in some other way than they are. So that is the financial reporting related frauds. So for example, I present, okay, I give guarantee, but I never record. I never record. Or you can say I have given loan to subsidiaries and then it goes on, goes on, goes on, and then it again comes to me as an income and I again pass on as a loan. So a loan is getting rotated as an income. There could be issues, okay, where you require the skill of accounting to gather the evidence. So there is a question: what should we do to become a forensic accountant? See, it's not a single day journey. You need to start from somewhere. Over the journey, you will become that. Basically, I'll say have your concepts clear. That's it. If I talk about forensic accounting, it's application of the accounting and investigation skills. So first of all, your accounting should be good. Then only you can apply it. And then the experience. After clearing, get with a firm who is good in the, who is serving in this area, and you can then have the experience also. So in case of insurance companies, forensic accounting applies. Yes, very applies. So whether can anyone challenge the report of the forensic accountant or investigator? Answer is yes. That's why the term is before the court of law. So when you gather the evidence, you prepare a report, and that is bound to be challenged. There are some people who will not, think, okay, no, I'll challenge in the court of law. Let's say, for example, in an organization, investigation happened, a report was issued, the person was removed from the job. That person will go to the court that, okay, I am, removed incorrectly based on false allegation. At that point in time, when I use the word forensic, means at that point in time, the report that you have prepared, the evidence you have gathered will be present in the court, and the court will say, okay, no, the investigation has been done correctly, the evidence is correct, and the removal was correct, and that's why the allegations are correct. If you are not able to prove your allegations based on the evidence, gone. Uh, if the inspector is involved in the fraud after investigation, how he will be punished? There will be another investigation then. But to be frank, there is, as of now, there is no such thing seen as of now that inspectors are involved. Any further doubt, guys? Any further doubts? So that was all about forensic accounting, and with an example, detailed example. So, any doubt? If no doubts, do one thing. Let's take a quick 10-minute break. And after the break, I'll cover one of the questions that was asked with respect to the forensic accounting. And then we will, move forward to the next topic. Okay. Let's take a quick 10-minute break.
Hello, everyone. Welcome back. Okay, so let's quickly see one of the MCQ question that was asked in the previous exam. Just give me a minute. Uh, okay, so let's quickly go through this. TQR Limited is engaged in the business of garments manufacturing, having registered office at Mumbai and branches across India. Mr. Sham, one of the senior managers, was involved in creating false documents, legitimate documents were altered to support fictitious transactions. Consequently, the management appointed you to get forensic audit done based on the digital footprint of the transactions handled by Mr. Sham. The use of sound techniques will enable to discover the defections on a timely basis. As a forensic auditor, how will you deal and suggest technology-based digital forensic? So remember in that I discussed something a technology-based. See, every transaction leaves a digital footprint in today's computer-driven society. Close scrutiny of the emails, accounting records, phone logs, target company hard drives is a requisite facet of any modern forensic audit. Before taking steps such as obtaining data from email, and forensic auditors should take appropriate legal advice so that it does not amount to invasion of privacy. Digital investigations can become quite complex and require support from digitally trained investigators. Many open source digital forensic tools are available to assist you in the phase of investigation, like cross drive analysis, statistics forensic, MD5, free log tools, live analysis, stenography, tracking log files, deleted files, NCASE and PC system logs. So that was one of the questions that was asked on the forensic. And so there is one more question we can cover. It's good one based on the due diligence. Okay, here it is. A European company engaged in the business of manufacturing and distribution uh, of industrial gases is interested in acquiring listed Indian company having a market share of 51% and asset over 1,000 crores. Due diligence of the assets of this Indian company to find out if any of the assets is overvalued. List down the areas of due diligence to find out overvalued asset. Okay, so the answer is the areas are uncollected and uncollectible receivables. Okay, absolute slow moving, non-moving inventories valued above NRV, huge inventories, packing materials with name of companies, underused or obsolete plant and machinery, their spares, asset value, which have been impaired due to sudden fall in market value. Asset carried at much more than the current market value due to capitalization of expenditure, foreign currency fluctuations, litigated assets and properties, Investment carried its cost through realizable value. Investment carrying a very low rate of return. Infrastructure projects expenditure, deferred revenue expenditures, group company balances under reconciliation, intangible of no value. So these are the areas where you can identify if the assets are overvalued. Okay, just a quick to you guys. Let's see how many of you, this this on the due diligence side. Let's say we have an investment, 300 shares in XYZ Private Limited. Sorry. Let's say this company has a 300 shares investment in XYZ Private Limited at rupees 45 crore. Face value of each share rupee 10 each, So cost in books, face value, okay, number of shares. Now this is XYZ Private Limited, unlisted company. How will you identify the valuation of this particular share? How will you identify this? This is a particular, okay, the company asks you, okay, check whether, perform the due diligence, whether this particular asset is overvalued or not. How will you check? What you will do to check the valuation of this particular investment, whether this is overvalued or not. Good. Ranvijay. Okay, Manini. Come on, guys. What will you do to identify whether the valuation of 45 CR is correct or not in the books of account? Good, Manini. See, when I talk about investigation, due diligence, or forensic accounting, fraud investigation, all these things have one thing in common. When I talk about due diligence or let's say investigation or forensic accounting, I talk about applying the skills of accounting, financial reporting, recording, preparation, presentation. Okay, applying these skills and applying other skills like investigations, review. Okay, to understand the underlying data, to understand whether the records are appropriate or not. But the prime thing is we need to be clear. We need to have these, need to apply the skills for accounting presentations and everything, valuations. So these are the certain areas where we should have the skills. Then only you can apply along with other skills. If I don't know, if I'm not good at the accounts, if I'm not good at the presentation, and if I'm not good at the valuation, okay, investigation skills alone will not help me out. So for example, here, what I can do, number one, I can check whether there is need of impairment. And how will I check impairment? I can check net assets and proportionate value of my investment, intrinsic value, net asset value, intrinsic value, whatever you call it. Okay. So I'll check that, okay, what is my value of investment based on the asset that the company is holding. Okay. Because you don't have a market price available. Second, then you need to check financial position of the company. Whether it's in distress, liquidity crisis, future plans, going concern issues. The financial position of the company will give you an idea, okay, whether that you invest is good or not. Number three, whether accounting policies are applied correctly. It may happen that, I have capitalized something into the investments which is not required to be capitalized. If there is a change in accounting, if there is a change in accounting policy, then the impact of same. Then application of AS or Ind AS. Let's say, for example, this is not a long-term investment, but a short-term investment. Then I need to record at some value, not at the cost in the books of account. If it is a long-term, then I'll record at the cost. Okay. So I need to understand whether the long-term, short-term should be carried at cost. Is there any permanent decline? A lot of things I need to check out to understand whether this investment is it whether this is overvalued or not. I hope I'm clear. Any doubts? Any doubts? Okay. Let's say, for example, I'll take one more example. Now this is the total AR, total account receivable. I thought the companies approached you to perform investigation. Okay, company has approached you to perform investigation, okay, to verify whether these AR are correct. So you need to perform investigation to verify whether these AR are correct or not. So what area you will check? I want a brief, not a detailed answer, but a brief. What you will check for these ARs? It is pretty simple. Trust me. What you check for this particular ARs to identify whether these are correct or not? Think of the areas that you will check. What you can check for AR? Okay, good start, Panini. Absolutely correct, Manini. Correct, Ranvijay. Correct, Boni. Come on, guys. Absolutely correct, Ranvijay. Let's say this balance is as on 31st March. Okay. As on 31st March 2022 in financials. Absolutely correct, Manini. Okay. Most of you have given the correct answers. See, when I'll go for the AR, okay, what I'll check first of all, actual sale has been made. So I can verify by lorry receipt, or you can say, shipping bill, or etc. Some underlying documents. Then number two, I'll ask for customer confirmations. It's not vendor, it's customer confirmations to confirm whether they are recording the same sale. This will ensure that I have recorded sales to correct party. This will ensure that sales or you can say receipt have been applied to correct ledger. If I don't get this particular customer confirmation, then I need to manually check whether sales are booked under correct party. And second thing I need to check is whether receipts are applied to correct ledgers. Have you heard of a fraud scheme known as so there is a type of fraud scheme that is, if let's say for example you receive a money from XYZ, you take away that money, you do not record in the books of account. Then you receive money, let's say for example ABC, so you'll account for the XYZ. Then ONP pays you, you account for ABC. DEF pays you, you account for ONP. So a cycle goes on. So you account, you apply the money that has received from one customer into another to hide the amount that you have taken out from the entity. So you need to verify whether the receipts are correctly applied to the correct ledger if you don't have the confirmation. Then you need to check aging of balance outstanding. The reason because this will help you to understand the bad debt provision you need to plus any information for debtors or AR in market with respect to their financial position. This will also impact. This will also help you to understand the how much credit is my impaired. Let's say for example, I came to know from the market analysis that ONP is bankrupt. So I need to write off this. I need to create a full provision in front of that. So that is not correctly valued. So this is how I need to do to understand whether these trade receivables are correct or not. Correct, Manini? Yep. So yep, that's the with respect to the investigation, due diligence, and forensic audit. Any doubt with respect to any of the topic? Any doubt with respect to any of the topic? Okay. If no further doubts, let's start the next chapter, that is internal audit, management audit, and operational audit. Okay. Now, so there is an internal audit standard board, and earlier it was known as the committee on internal audit. So now this particular standards on particular this non-standing board, the internal audit standard board, has formed up and has came up with the internal auditing standards, okay, that are mandatory to be complied with, and that are required to be, you can say, followed for the internal audits. Okay. So now, before we deep dive into any of the standards or the concepts of the internal audit, understand what is internal audit. So I want to understand from you first, what is internal audit? What do you mean by internal audit? What do you understand in internal audit? When I use the term internal audit. What do you mean by, what do you understand with the term internal audit? Manini, this question I'll take up at the end of the particular this topic, if it is fine. Okay, there are few questions on the still questions on the investigation and forensic audit. Let me take about that. Okay, so first question was, can forensic inspector relate previous forensic report of another inspector in an investigation? Yes, he can. Number two, question is, why we need investigation knowledge for becoming a chartered accountant? See, it's same. Why you need the knowledge of taxation to become a chartered accountant? Why you need the knowledge of costing, financial management, SFM? So there is not what you can say a particular area why you need, but it enhances your skill. It's because of the skill that you want to gather. So it's not something like for CA, but it's a see. A chartered accountant is known for his skill and is for knowledge in the market. That is only not restricted to the audit, but to the various other fields. And one of such fields is investigation and forensic audit. Yeah. So let's come back to the internal audit topic. Okay. So my question was, why, what is the difference and what do you understand by internal audit? What do you understand by internal audit? So I got in some answer. Review and monitor on controls and financial recording. Correct. Audit by an internal person of the organization regarding the internal controls on continuous basis. Absolutely correct. So good, Aniket, Vijay. Then checks of entities reporting operations by an auditor engaged by an entity itself. Absolutely correct. Checking of internal control system. Good. Continuous check and improve simultaneously as well. Correct. Good, Boni, Kaushiki, Manani. See, when I talk about uh, internal audit, as correctly said by you guys, is carried by the organization, like from the inside of the organization, and carried by the person who is from the organization. Unlike statutory audit, where an independent third person is there, internal audit is not, something which is done by the internal third independent party. It is done by party which is part of the organization. Okay, so very critical. Internal audit is done by a person who is a part of the organization rather than the party who is third person. Now second question comes is that why internal audit is carried out, like to check internal control system, to check reporting, to continue improve. So internal audit basically is carried, first of all, for monitoring of internal controls, examination of financial and operating information. Usually we call it MIS, management information that is submitted MIS report. Review of operating activities, budgeting process, manufacturing process, or operational activities basically. Review with compliance and laws, like for example ACBC, that is anti-corruption, money laundering. Okay, so anti-corruption, anti-money laundering, other regulatory laws. So you check compliance with the laws. Then risk management processes, policies, and critical areas to perform the risk management. So risk management is one of the area. Governance, to highlight a good governance, That is why. So these are the areas for which internal audit is carried out. Now, internal audit actually provides independent assurance to the organization regarding the effectiveness of the internal control, risk management, or the areas I'm talking over here, that monitoring, examination, review of operating activities, governance. That's an assurance, independent assurance the organization itself gets or achieves, okay, from the internal audit. And that also enhance the understanding of the organization, that it is moving on to the correct direction with respect to their organizational goal. So they are moving on to correct direction. Okay, I want to achieve that organizational goal, I'm moving on to the correct direction. Now, the nature of the internal audit may go beyond your assurance services or your assurance. Okay, so most of people think that internal audit is another audit, but in today's time, it's not. Today, internal audit is not only for audit. Trust me. Today, internal audit is an advisory role also. Okay. So earlier there was internal audit concept that okay, internal audit, separate audit performs like they checks and verify everything. No, no. Today it's one step ahead. One step ahead means internal audit checks on a proactive basis, but they suggest on proactive basis also. They provide advisory to the business on proactive basis. Okay. So for example, I give you a critical example. Let's say an acquisition was going on. There was deal going on. They involved internal audit. Before getting the entity merged, they involved internal audit. Okay, you perform the internal audit, check the operating information, operational activities, check the internal controls of the company that is going to be merged. You can say a sort of due diligence. Okay, due diligence on the internal controls of the entity that is going to be merged. So internal audits work is not only restricted to what you can say, to their own organization, but at the time they become an advisor. A new area is coming, ESG audit. ESG. So internal control, internal audit teams now are going to be auditing the ESG reporting. So not only they will audit, but they will recommend. They will be part where they will enhance and evaluate the reporting process, ESG reporting process. So it's not till the assurance, it's beyond assurance. Okay. So that's the concept of internal audit in today's time. Now, I talked about these particular areas or objectives or scopes of internal audit. These are like some of the areas, not all. This list is not exhaustive. Some indicative items I have provided to you guys. Okay. Now, very quick question to all of you. Is there any section in Company Act which deals with the internal audit? If not, then fine. Then no section. Is there any section in Company Act which deals with the internal audit? If yes, then which? If yes, then which section? Correct, Shailendra? Correct, Kaushiki? Correct, Banini? Yes, it's section 138 of the Companies Act, which deals with the requirements of internal audit. Okay. Now, what section 138 talks about? I'll explain you. So, section 138 of the Companies Act Okay. Deals with the requirement specifically says that classes of companies, as may be prescribed, are required to appoint internal auditor who shall be either a chartered accountant or a cost accountant, or any such other professional may be decided by board to conduct internal audit function. Okay. So classes of companies as may be prescribed. And now when I talk about the classes of companies, those classes of companies are prescribed under Rule 13 of Companies Act. So what Rule 13 says? Rule 13 says that every listed company, first of all, every listed company is required to have an internal audit. Every unlisted public company. Okay. But for public unlisted company, the paid up share capital shall be of 50 crore or more. Turnover shall be 200 crore or more. And outstanding loans and borrowings from public institutions, should be exceeding 100 crore any point in time. So outstanding loans at any point in time. Okay. Then outstanding deposits uh, from the public, outstanding public deposits shall be more than 25 crores or more at any point in time. So the first and second are at any point in time, but first and second are during preceding financial years, but the third and fourth are at any point in time. If you satisfy these conditions, then yes, you are required to appoint an internal audit. Then every private limited company having turnover of 200 CR or outstanding loan from bank and finance 100 CR, again during at any point in time. Okay, if you exceed this limit, then you are required to appoint internal audit. Now, as I said, internal audit can be a chartered accountant, a cost accountant, or such other person that may board prescribe. Board means company's board that may prescribe. Okay. Now again, internal auditor cannot be an employee of the company. It's not necessary that internal auditor will be an employee of the company. It cannot be an employee of the company. But again, that if it is not an employee of the company, it will be a third party, as appointed as an internal auditor. So that is my Rule 13, wherein I am required to appoint the internal auditor as per the requirements of the Companies Act. Now, there are some specific sections I want to discuss over here, or specific provisions I want to discuss. Remember, in our companies, so in one of the provisions in Companies Act, remember we were talking about the internal audit, like it was with respect to Caro that we discussed. Anyone remembering Caro that we discussed? So do you know which para in the Caro was talking about internal audit? Anyone can remember, recall the Caro? Any para in Caro that talks about internal audit, and what was the requirement over there? Any idea? Anyone? What was the Caro detail para number that talks about the internal audit? Come on, guys. So there is a question at any point during current year or preceding year? Preceding year. For the limits in Rule 13, it's preceding year. If company is not covered now by Rule 13, but after some time it is getting covered, then they need to apply when they are getting covered. Then private limited 200 crores. Exceeding private limited turnover is 200 crores. Come on, guys. I'm talking about Caro. Which para in Caro was discussing about internal audit? Which para in Caro was talking about internal audit? So in Caro, remember something we talked about para 14, that is internal audit system sufficiency, whether the company has an internal audit system commensurating with the size and nature of its business, plus whether the reports of internal audit for the period under audit were considered by the statutory auditors. So we were discussing about these areas, like, in Caro also, that, okay, whether they have a good internal audit system or not. Okay. Para 314 of the Caro. So in Caro, this was the requirement. Plus, I just, for your knowledge, for linking the things on a larger scale, we saw SEBI LODR regulations. Okay. In that regulations, we saw some of the roles of audit committee. One of the role of audit committee was to review the internal financial controls, review the internal audit function. So audit committee was responsible to review the internal audit function. Okay. They were responsible for discussion with the internal auditors on any significant findings. Okay. So they used to have a discussion on the internal audit with internal auditor on significant findings. In mandatory review, they were supposed to review the internal audit report, term, appointment, remuneration of internal auditors. Remember something we discussed in SEBI LODR with respect to the audit committee, with respect to the internal audit, that review the internal audit function, discuss with the internal auditors on any significant findings, internal audit report, appointment and remuneration, term of internal auditors. Now, there is one point in the SEBI LODR that is with respect to reporting of internal auditors. Okay. So there are discretionary requirements in SEBI LODR, but which, as per regulation 27(1), which talks about, again, as I said, discretionary requirements. So over there, there's a reporting requirement for the internal auditor that says that the internal auditor may report directly to the audit committee. May report, not necessary. But if you want a good governance, then they shall directly report to the audit committee. There are certain other areas I want to talk about with respect to the internal audit. Before I go into the detailed scope of the internal audit, but again, I want to discuss on the some of the SIA, that is Standard on Internal Auditing, that are issued by ICI, just to give you a glimpse that these standards, how these are, and how what you can say, they are arranged. Okay, so these are the certain standards on internal audit issued by ICAI. I'll not go into the detail with these standards. I'm just provide you the glimpse. Okay, so like we have an engagement and quality control standards, we have these standards. So first is preface to framework of standards on internal auditing. Then you have a framework governing internal audit. We have a basic principles of internal audit that talks about what are the basic principles, how like what we call an internal audit and everything. Then the framework governing internal audit basically, okay, talks about my objectives of the internal audit. Then the framework, they talk about the independence, basic principles, key concepts, standards, how it is there, code of ethics, okay, what are required to be followed. That is in the framework. The preface explains the the framework governing the internal audit, the standard, mandatory nature, standard setting process, and everything. Okay. The first standard, SIA. So these are known as the SIA, Standard on Internal Auditing or Internal Audits. Okay. So these standards on internal audit, the first SIA 110, that is nature of assurance service. So that standard deals with the the detail of, okay, what kind of assurance service we provide in internal audit, the components of assurance engagement assignment, objectives of assurance assignment, the undertaking under an assurance assignment, everything. Second is about the internal controls. Okay, that talks about the definition of internal controls, then responsibility of the board and management with respect to the internal controls, responsibility of internal auditor with respect to the internal controls, and other guidance related to the internal controls. Third is risk management, again staying on the same line, the duties, responsibilities of management, auditor, guidance. Fourth is about governance. Okay, so the fourth standards talks about governance related things. Again, what are the responsibilities of management, internal auditor, some explanations, definitions. And fifth is compliance with laws and regulations. Now, all these are the 100 series is on these standards on key concepts. They define the concept of assurance, internal governance, compliance. They establish the requirements of management, auditor, and some guidance on that. Second, Series 200. Series 200 talks about internal audit management. So how the function should be managed. Okay. So 210 basically, talks about managing the internal audit function. 220 talks about conducting an overall internal audit planning before conducting an internal audit. 230 objectives of internal audit. 240 using the work of an expert in internal audit. As we have, the work of using the work of expert in engagement and quality control standards, same. 250 communication with those charged with governance. We have 260 and 265 SA. In SIA, we have a 250. Then 300 to 400 series, it's on the conduct of audit assignment. Like 200 was management, like planning and overall at a top level. Now 3 to 400 is conducting the audits under the internal audit function, like planning the internal audit assignment, internal audit evidence, documentation, review and supervisory of internal audit assignment, communication with management, reporting of results, monitoring, reporting of prior audit issues. That is the 300 to 400 series. 500 series is a specialized area like internal auditing, IT environment, third-party service provider. Then there are some other SIAs which were earlier issued, like sampling, analytical procedure, quality assurance, consideration in a fraud in an internal audit, related parties. So these are other SIAs which were issued earlier with respect to the internal audit. So that is an overall structure of internal audit standards on internal audit SIA issued by ICI till date. Okay. Again, now the question is whether this is detailed covered in the particular your like syllabus. As of now, no. Detailed it is not covered. So I suggest you refer the areas which are only covered in the study material as some of the aspects of these SIA, like for example, SIA 370, reporting results. Somewhat it is, it is there in your study material. So whatever it is given in your study material, it's final. Out of that, there is nothing much that could be, covered in what you can say in examination. Okay. Like for example, some of the areas of SA 390, SIA 390 is covered, 370 is bit of covered. So that is there with respect to in the coverage. Any doubt till now? Any doubt? Any doubt? Okay. If no further doubt, let me go ahead. So we were talking about internal audit. Now, usually when I talk about internal audit is the second line of defense in an organization. Okay. The first line of defense. So these are the basically lines of defense. I have, try to represent here through a diagram that appears to be a basically diagram, but I'm not sure whether I'm successful or not. But yeah, these are the lines of defense in an organization. Okay, 3 lines of defense. 1, internal audit, internal controls. 2nd, internal audit. 3rd, statutory audit. And what is left, that is left. No one can do. But the target is the item that is left out. Okay, the item which is left out should not be material. Okay, and should be below acceptable level. See, in an audit environment, there are inherent limitations. You cannot bring risk to 0. The only thing you can try to is to bring the risk at a level which is below acceptable level. So there is an acceptable level, bring the risk below that. That's something good. Okay, so I'll move to the next one is detailed scope of internal audit. Okay, so we'll discuss the detailed scope of internal audit. What is the detailed scope? So the detailed scope of internal audit talks about, internal control system and procedures, custodian of assets and safeguarding of assets, compliance with policies, plans, procedures, relevance and reliability of information, organizational structure related duties, utilization of resources, accomplishment of goals and objectives. So let me explain each one by one. So first, review of internal control system and procedure. What is the scope of internal audit work in this area? So the internal audit needs to review the internal control system, procedures involving assessing the design and operational effectiveness of the internal control system. So our job or internal auditor's job is to evaluate the design and operating effectiveness and efficiency of the internal control. Now, this is done to strengthen the overall internal control environment. Today, if I identify if there is an error, there's an issue, tomorrow I can rectify that error and issue. So I'll strengthen the process of internal control and systems and procedures. This will give me a good control environment, basically. So we know there are three types of risk: inherent risk, control risk, and detection risk. So all these together, audit risk, we need to bring the audit risk to the lower level, below the acceptable level. And hence, we can only do that if we can reduce the control risk. So control risk is something, that item that my control gets failed, or, it's something, we need to improve that. Now, there are some inherent limitations with respect to the internal controls. I cannot have, controls across the organization. See, whenever I implement a control, I do a cost benefit analysis. Okay, what is the benefit I'm getting and what is the cost of implementation of a control? Let's say, for example, if I do not perform this analysis, what will be the scenario is I have thousands of controls and I have controls to monitor those thousands of controls. And then I have an entity controls to monitor the summary controls of those 1,000 controls. I don't want an organization like this. So we have more controls than processes. Okay. So there should be a balance between controls, control environment, processes, risk assessment, and identification of risk and detection of the risk. That balance is based on a lot of things. One of such thing is cost benefit analysis, cost benefit comparison, feasibility study. Let's say, for example, today there's an organization which is running manually. Okay, they don't have a good ERP. Now I'll go, the controls are not. I'll say, okay, the controls are not good. Replace the ERP. Now bring the advanced version of SAP, which should have the ultimate level of controls. Is it viable? Second, is it feasible? Cost benefit analysis. What is the benefit I'm getting to bring that control high level SAP into the organization? What is the turnover? What is the benefit I'm expecting? How much amount I'm expecting that it will save? It will get saved by the, that particular introduction of SAP. Process streamlining and everything. A lot of things are there in the picture that I need to consider before I suggest the control, implementation of a control. Let's say, will you suggest to implement a control of rupees 4 crore just to monitor a 4,000 or 4 lakh sale of scrap? Answer is no. You consider the materiality, the chances of risk, likelihood, and occurrence, potential impact of the risk over here, and accordingly you need to suggest. Second area, so that's something I'm talking about cost-effective internal controls. Cost-effective. Okay. So there are some questions I'd like to take it. First, a firm or a body corporate can be appointed as an internal control. Answer is yes. It can be appointed as an internal auditor. Sorry, not control auditor. So a firm or body corporate can be appointed as an internal auditor. We saw that internal auditor is only employee of organization. Can outsider be an internal auditor? Answer is yes. A lot of companies appoint outside third parties as an internal auditor so that they can maintain the independence. There is no mandatory requirement that the internal auditor should be from the organization. But yes, they should have the internal audit function. So a lot of now many companies go on to follow hybrid model, that is partial internally and partial externally. Okay, so hybrid models are there, fully outsourcing model is there, fully internal model is there. There are various models. So in an organization, a person can be appointed as an internal auditor and forensic auditor both. Yes, it can be. There is no issue in that. And usually they are also. Okay. So these are the questions. Now the next area for the internal auditors, okay, is the review of custodianship and safeguarding of assets. Their role is to safeguard the assets also. And how they will do is, first of all, to safeguard the assets, first of all, they need to identify whether the asset exists or not. Today, if I want to safeguard my inventory, I need to check whether the inventory is only in the books of account or it's actually physically present. So I need to check the physical presence of these inventories also. Okay. So what I'll do is existence of the asset is something I need to check. To safeguard it, first I need to check whether it exists or not. Number two, I need to ensure there is a segregation of duty. Unlike the case of warehouse, remember in fraud investigation, we talked about there was a segregation of duty issue in warehouse. So I need to ensure there is a SOD proper in place for the asset. Otherwise, there are chances of fraud. Then ensure the control system are appropriately working, like in case of fire, theft, illegal activities, or something like that, accident. Let's say there is a plant, manufacturing plant of automobile. Now, a lot of manufacturing process requires a manufacturing equipment. I'll give you one simple example. Have you? I'm not sure how many of you visited the warehouse. Okay, so how in warehouse it is? I'll just show you with some example. Okay, let's say this warehouse. This is a warehouse. This is a basically internal road on the warehouse. Now on the right hand side, on each and every side of the road of the warehouse, what happens is there are certain, racks. So basically, there are certain racks placed over there, which are very big in the height. And on those racks, there are some items placed through the help of equipment. Okay. Again, on the both hand side, you will find these kind of racks, wherein these racks are there where a lot of items are placed throughout the warehouse, basically. So multiple racks are there on particular, in a warehouse, like where the items are placed. Boxes, crates. So there are a lot of many things, on place on these big stands on in warehouse. Okay. Now, let's say for example, do you know there are safety guidelines in a warehouse with respect to these stacking up materials stacking up to a particular height? That that the distance between the material starting point and the road, there should be some gap between that. The height should be this much. Okay, there are some standard policies and procedures. Okay, if you are keeping material on such racks, then there are some base crates are required, some wooden stands are required to maintain the balance, because not each and every material is a square in shape. There might be some rectangle, some big, some small. So stand is required for each type of material. Appropriate lines should be there on the road to guide person. Okay, this is the way, you need to walk in this direction. So this is the way to go out. This is the way to come in. Okay, from here you need to take a right, not allowed zone or something like that. So there are a lot of requirements in warehouse where they keep the material. Now, the inventory that is kept on the racks, okay, is asset for us. As a part of internal audit, we go and we check whether these policies and procedures are applicable and are properly implemented, are properly followed. They do something wrong. It may, whatever may happen is the crate might fall down onto someone. Someone might get killed. Accident, chances of accident. Something can happen. Damage of inventory. That's the evaluation of process I'm talking about. That's the safeguarding of that I'm talking about. So we are not here to only do the financial, but the process, operational, and the safeguarding of assets. Clear? Safety regulations. If you want, you can check the safety regulations. Uh, any doubt till now with respect to the safeguarding of assets? Okay. Then there are some more areas, that is review of compliance, review of relevance and reliability of information, then review of organizational structure and review of utilization of resources, achievements, review of achievements and goals and advances. Uh, I'll discuss, considering the time limit. I'll discuss that in the next lecture with the rest of the topic of operational and management audit. But any doubt till now, till whatever we have discussed? Yes, Boni, that will be done. Actually, there was some issue that we were facing, but yeah, it will be done today or tomorrow by later. Any doubts? Guys, I'll request to provide the feedback, and also just want to know whether you are like, you need something else, you whether you want some change or something more. Please let me know, even in this comment section also, so that I can provide you those details. So there is one question: disqualification of being internal auditor and external auditor and forensic auditor are same? No. So one of the disqualification for external auditor is being an employee and officer of employee of an officer. That's not applicable for the internal auditor, neither for the forensic. But again, there are standards like I told you, that the standards on internal auditing. There are standards for the forensic audit also, forensic investigation. Let me show you some of the detail on that. So there is an exposure draft that has been issued, which are the standards on forensic accounting and investigation standards. Okay, so they earlier there was a exposure draft, then the standards were issued. Okay, and so if you go and if you check these draft, you will come to know that these exposure drafts or these details of these standards, actually they guide how and what should be the requirements for an internal auditor, forensic auditor, like independence, objectivity. So there is no legal and law related requirements, but yes, there are certain ethical things that you need to comply with. The same we need to comply in the being an external auditor. that are enumerated in these standards. Any further doubts, guys? Okay. If no further doubts, thank you guys. Thank you for being participative and thank you for joining the lecture. I'll see you in the next lecture. Please be prepared with the rest of the topic of internal audit. Okay. Thank you. I'll see you in the next lecture. Have a nice day. Thank you. Bye.